Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session before I introduce Rob. First and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website. If you'd like to read it in full detail there, certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, per usual, we are live streaming to multiple different platforms. So Rob's going to go through his general presentation, go through some case study considerations after, and then after that, open it up to questions with the time remaining. So we are going to funnel in questions from all of the platforms in addition to our Zoom audience when it comes time for that. And just keep in mind the question portion is limited. So if we don't get to your question, it has nothing to do with the validity. We just only have so much time for this session. With that, take that as encouragement to attend the insiders meeting when there's a 45-minute portion of Q&A solely based on answering questions for our paid subscribers. So obviously a much higher likelihood of getting your question addressed there if we don't get to it in this session. Lastly, the chat window. I can handle any support related queries in there. And of course, for any interaction amongst other attendees, please feel encouraged to use that window. For our Zoom audience, do make note that by default, it goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change that to at the bottom to everyone instead of hosts and panelists. All right, well, we had election day today, which made for an interesting day in the market. So I'm going to be interested to hear Rob's thoughts on that as always, and very much looking forward to interacting with you all. So thank you for joining us for the live session. At this moment in time, I'll introduce who we're all here for, the man of the hour, and that's Rob Roy.
Hi, everybody. Welcome to TradeFinder Live. For all of you joining us on the various social media platforms, welcome. It is going to be an interesting day with election results coming in, and it seems to be coming in a little slower than what I thought they would be. But anyway, we'll see how that all plays out in the end. There I am for whatever value that my ugly mug adds to this. As I mentioned, we'll go through and talk about the markets, not just our market, but international markets as well. I know we have a lot of international viewers, and we'll talk about any case study trade alerts that we have closed for our alert subscribers, tell you a little bit about how that works. We'll review, there's only 2 open case study considerations from our previous trade finders the last 2 weeks. And then we'll look and see if we can find one tonight. And then with whatever time we have left, we'll open that up to the live Q&A. If you've been following the earnings, they are all over the map. So hard to figure out exactly what's occurring with the different markets. And just wanted to make sure, because I got the Zoom thing up. Can everybody see the chart?
Correct.
You can see it? Okay, I have no idea what's showing up on the screen now, but hopefully, so you can see that okay, Zach?
Yep, we see the software, no worries.
Okay, good. All right, so when we take a look at the talked about in the short, and by the way, if you haven't been following our shorts, we do the YouTube shorts every night. Follow along with those. I didn't do a short or a market update over the weekend because I went out of town to see Metallica. That was a bucket list thing for me, and seeing Metallica is kind of my thing. Some of you are a lot younger and probably not the same type of thing, but that was really cool to see Metallica. They performed a lot of their old stuff and paid tribute to the people that helped to get them started. I always like hearing people's stories, and so anyway, when we take a look at where the market is, I said I would be surprised if the move to the upside went above 380. Well, on Thursday, we had this mark down here, hit 379 on the high. Then on Friday, we hit 380. Today, we did trade above 380, and that was early in the trading day on very low volume. And then we had a big sell-off that started at 130. Just the market went straight down on some volume, but then some other volume came in, and we rallied back to the upside. And on the end of the day, it was a doji, which means indecision. We opened, we traded higher, we traded lower, and then we closed right about where we opened. And when you take a look at that, it's sitting dead on top of the 50-day moving average. So all that stuff is significant, but probably what's going to be more significant is what happens tomorrow. You can see we did have below average volume, a little more than yesterday, which was really low volume, but still below average volume as the market tries to dissect. There's some people that were trying to poo-poo the results of the midterm elections and how that could affect things. I don't think the market's viewing it that way, at least based not on the way the volume has been acting. So when we kind of go sideways for a couple days on below average volume, that seems like it does matter to the market how the midterms play out. But we'll know a lot more about that tomorrow. So watch the short tomorrow. We call them EWO at the close. So keep an eye out for that as we see how the trading day ends tomorrow. There's some volume back and forth after hours, but it's the same kind of thing that happened today. Volume to the downside, volume back to the upside as people are trying to figure out where we're going to go with this market. And until we break above this wave 4 high that occurred on November 1st, you can see we're at 59%. So we could go a little bit above that and get right exactly to that 61.8% fib level without changing this wave 5 pattern at all. So there's a little more room to the upside if the market wants to do that. But the fact that the 10, 30, and 50-day moving averages are all converging here, and we've got a doji sitting right on top of the 50-day moving average, I think tomorrow is going to tell us a lot as far as whether or not we bounce back to the upside and create a new wave 4, possibly at that 61.8% level, or if we turn and start to head to the downside. I still want to note that on this projection, and that's what this is, it's a wave 5 projection. Notice that we are still currently in the wave 4 because that's the one that's labeled in green. When that turns purple, that means the wave 4 is done, and then we'll label a wave 5, which will be in green. It tells you that's the current wave. We are not there yet, but once we do, if this wave 5 pattern to the downside is going to continue to hold, we're going to start going vertically to the downside here pretty quick, because the target with the date is the 29th of November and we're at the 8th. So that's 3 weeks from now. So are we going to go that far down in 3 weeks? That would be pretty crazy, but that's what's being shown on the charts right now. And I've seen too many of these Elliott wave charts be extremely accurate to discount anything that Elliott wave shows. So I think we just need to pay attention to what the market tells us over the next couple of trading weeks. Now, just a little bit of a housekeeping thing for our alert subscribers that are with us. Thursday night, we do our insiders meeting, which is for alert subscribers only. I live in Florida. I'm on the East Coast, and we're about to get hit with another hurricane. Can you believe that? Well, the last one, Ian, came from the West Coast across to the east, but this one's going to hit us directly, and we're going to likely get hit with the northeastern quadrant late Wednesday night into Thursday. So just want everybody to be aware that if we have power issues, etc., there's a chance that we might not be able to do the insiders meeting Thursday night. Just wanted everybody to be aware. Hopefully it changes slightly or weakens or whatever, and something changes. But I just wanted you to know that there is a chance that based on this pending hurricane, we got hurricane warnings today, everybody's phones went off, etc., that there is a slight chance that Thursday night's insiders meeting won't be able to be done. If we have power, we'll be here and be able to go through that. But that's all the more reason why to make sure you watch the short tomorrow night so that we can update how the market reacts once we get the results of the midterm election in tonight. So that's the things that I wanted to show as far as the SPY, and just kind of the wow, is that possible on the move to the downside? So I thought we should show the VIX. We did have a little bit of a move back to the upside on the VIX today, but not a lot. We're still kind of hanging around this 25 area here. We went just a little bit below it, got a little bit back above it today. We look at the moving averages, and you can see the high of the day hit the 10-day moving average. So this area on the VIX right around 25 seems to be where the major point of support resistance has been. We've gone above it, we've gone below it, but the midpoint is certainly right where we are at 25. Which way are we going to bend on that tomorrow? Are we going to break lower and have a big rally tomorrow, possibly relabel that wave 4 higher, or are we going to turn to the downside, which would mean an upward move in the VIX, potentially coming up to this 50-day moving average or even higher? So I do think tomorrow is going to be a really significant day in the markets. Looking at interest rates, the 10-year has been consolidating here, just going dead sideways as we've traded 4 straight days with the lows right on top of the 10-day moving average. So the fact that we haven't had a significant move lower, you look at that from a dichotomy type of standpoint, does that mean that foreign money is feeling better about the global economy and not feeling the need to come in and buy US Treasuries? Or are we just going through a consolidation before we get another rip to the upside in interest rates, which I don't think would be good for the market? The one thing that is really interesting, in my opinion, is the dollar moving back down. Now, I'm going to say the same thing that I've been talking about for months now. I am in favor of a strong dollar, but not this strong. And the fact that we've had this 3 days to the downside in the dollar has brought us below not just the 10-day moving average, but the 50-day moving average. We're right at the 23.6% fib level, which if you really read the works of Elliott himself, he wasn't a big believer of that acting as a true correction. He felt like it was more just a pullback within an overall impulse. So if that theory is right, then we have more upside to go in the dollar. That's not going to be good for international companies. I added on the 200-day moving average because you can see we're well above that. So once we've broken below the 50-day moving average, and we broke below it yesterday and gave a confirmation day today, then you have to start looking at, could the dollar come that far down? And what does that mean? Does that mean that the global economy is feeling better? Or does that mean that, man, even the US economy is heading for some sort of a severe recession, and even the US dollar isn't going to withstand the movement that could occur from a really weak economy? So you can see there's indecision as relevant or as related by the doji in the S&P, but you look at the dollar on where it's been. When's the last time that we closed with a follow-through day below the 50-day moving average? You have to go back really to January before you could see a significant move lower. Now that didn't hold, and we rallied back above the 50-day moving average. Is that going to happen now? Yeah, you know, this just really difficult times to figure out where things are going to go. As we talked about in the shorts with the Federal Reserve last week, there was some chatter, hopium is what I call it, that the Federal Reserve was going to come in a little bit more dovish. And even in the written comment, people were trying to figure out how there was some dovishness in the written statement. But then when Chairman Powell came on and did the press conference, he was very clear that he's just as hawkish as ever. So I think that was turned away, and that's what occurred in the markets. But then we've rebounded just a bit, and to be right at 380, right at the 50-day moving average with the doji on 2 days of below average volume, something's getting ready to happen. We're about to find out if we are going to relabel that 4 or if we're going to turn and head lower. I don't think we're going to have to wait much longer. We could have a little buy the rumor, sell the news on this election stuff. Perhaps this last little bounce, or even the bounce off the wave 3 low, was going into how the market viewed the results of the election for the market going forward. Remember, the market wants gridlock. It's really important to remember that. I know a lot of people think that when you have a Republican-controlled Congress, that's good for the markets from a fiscal standpoint, et cetera. But history shows that the market likes gridlock. The market likes when, like what could happen, where we have a Democratic president and a Republican-controlled Congress, nothing significant is going to occur then. That's a scenario where the market could move higher. If that's a disappointment, that could move the markets to the downside. So I think anything is fair game for tomorrow. And as far as I'm concerned, I can't wait to get up and see what happens to the markets in the morning. I do think we're going to see some volatility in the markets, whether or not we end up to the upside or the downside. So 10-year dollar. We've talked about that. Let's go through and look at some of the other markets here in the US. If we take a look at the diamonds, remember that's the one that has relabeled. And if we put the Elliott wave pattern on, we have no longer a wave 5 to the downside pattern. What it looks like there is, and we talked about this, that with the wave 5 pattern going away, then you have to view that as an impulse move. And what kind of impulse move? Is it a flat? Is it a zigzag? Are we going to just consolidate into a triangle? Any of those things are possible when you have a move off of the lows like that. And then you look and say, could that possibly be a zigzag pattern here? It's only a 30% correction. So we're kind of in that 23.6% range, not making it to 38.2. So that's not really giving us much of a signal yet either, which means the way I look at this, for whatever that's worth, which isn't a lot, but for whatever that's worth, this little pullback doesn't mean anything. This is all still one big impulse move. And what happens from here is still open to a zigzag, a triangle, or a flat. Flat is sideways. Triangle is a consolidation, so it's kind of sideways, but it means a significant break is coming. And then the zigzag is directional move. So if we are to continue to the upside here, which again, I just don't think this move down here is far enough to call that a correction. That could be a zigzag moving higher, which would lend credence to perhaps we relabel this wave 4, or maybe it goes away. But I don't see that. I don't think that's enough to say that right now. We could start a more significant pullback at any point in time here and create any of one of those three corrective patterns within the markets. Taking a look at the Qs, and boy, haven't the earnings been interesting? Have you been watching the earnings? I mean, we had Mosaic that came out. They missed by 30 cents on their earnings, and Mosaic was up today. But then you had Akamai that missed by 30 cents or beat by 30 cents, and nothing happened. Akamai, let me just be clear. MOS missed by 30 cents and it went up. Akamai beat by 30 cents and nothing's happened after hours. It looks to the downside. So there's no rhyme or reason to how the market's viewing the earnings in this earnings season. It's crazy. And we're going to kind of take a look at that from our AI strategy here in a little bit when we get to looking at our website. But looking at the Qs, there's the 5-wave pattern and nice doji there. Really clean doji right there at 270 on the Qs. So the Qs are kind of following in line with the SPY, which is telling us something of significance is likely to happen tomorrow. So I think we want to pay a lot of attention to the market's trading action tomorrow. I don't think you can really pay much attention to what's going on in the futures right now. You have to wait till, I guess all the polls should be closed by now, but until they start getting more definitive results, a lot of states have just a couple percent in. They're calling races in some of the states with just a small turnout or a small percentage of the vote counted. I don't think that's smart based on what we've seen over the last few years. Let's wait till later in the evening till we see exactly how things are going to shake out from a congressional standpoint. But with the Qs, with this doji right here, and looking at the moving averages, look at that, dead on the 10-day moving average there. So you can see the wave 4 kind of came right up to the 50-day moving average, touched it, and we've gone down since. But look at the date here for the wave 5 low forecast on the Qs. It was the 29th of November on the SPY. It's the 22nd of November on the Qs. Both of those are looking for, if we are going to go, and so I want to be clear on that, if we are going to go down and make these wave 5 lows, they're going to be fairly vertical moves that occur in the next few weeks. 2 to 3 weeks should occur. And if not, then you have to start thinking of relabeling, etc. So just really interesting stuff going on. And this is the kind of thing that helps me wake up in the morning and take a look at the market when you have things like this, because this is where you learn, when you have unusual things that are occurring in the markets. Looking at the IWM, a bit of a doji, kind of look 3 days in a row of, even 4 days in a row of quasi dojis, not a perfect one, but awfully darn close. An amazing amount of indecision on the IWM dead smack in the middle of the trading range we've been talking about for how many months now. 170 to 190 is the trading range. That's the support resistance area. So 180 is dead in the middle, and call it 4 consecutive dojis. So the indecision on the small caps right there with the 10, 30, and 50-day moving averages all kind of converging. And holy cow, with Bitcoin. You saw the stuff that was going on with Bitcoin and the FTX. They're talking about liquidity issues, and look what happened. Right when it looked like we were about to break to the upside. So we've been consolidating here between the 18 and 20,000 mark for so long. And then we broke up and we're consolidating at 20,000 right on top of this previous trading range. Remember, we always talk about this potential for a false breakout to the upside and then a big move lower. And so that's around where we're trading at the time of this recording, in the 18,000 range. But it has to do with the FTX and liquidity, and just not a good day for Bitcoin or the cryptos. And so could we have had a false breakout to the upside, and then this means a significant move lower coming? Remember, we've talked about the potential for somewhere in the 12,000 to 16,000 range on Bitcoin was possible, just when it looked like maybe we're taking that off the table with the potential for a move up with what occurred yesterday. All that got reversed and then some today. So I think we have to pay attention to the potential for more downside there. A lot to talk about with what happens tomorrow. And the reason I'm saying that is because same thing as with the equities markets. You have to have a follow through or confirmation day. Just because we reverse today doesn't necessarily mean that that's the move that's going to occur. You have to have if we follow through and close lower again tomorrow on Bitcoin, then it's going to be, how low do we go? Is it 12,000? Is it 16,000? Where do we go from there? It's going to be really interesting to see how that plays out. But at least some things to talk about with Bitcoin, where for 3 months we've had nothing to talk about, just this ping pong between 18 and 20,000. And as soon as we got up above 20,000, it looked like maybe we were going to try to make a run at 24,000. Nope, got turned back today with significant liquidity concerns. That tells you that there's still a lot of leverage in the crypto world. And when you start seeing liquidity issues, that's because of the leverage that's going on. And so you can get these like vacuum moves like we saw today. And there's a possibility that you get another one tomorrow. I mean, we could literally be at 16,000 tomorrow at a Bitcoin. I'm not saying that's going to happen. I'm just saying that's a possibility when you see moves that are based on leverage, etc. So that was really in the news today as far as Bitcoin. Probably going to have some questions on that. Let's just go ahead and look at Ethereum. Since obviously going to be similar in the Bitcoin world, just when it looked like Ethereum was ready to take off and make a significant move, here we are right back down to where we consolidated, or almost where we consolidated here in this 1,300 range on Ethereum. So the good news is it hasn't broken that support level like Bitcoin is trying to. You could say that, well, 18,000 is still holding on Bitcoin. I couldn't argue with that. But just when it looked like we were about to make some sort of a significant move, I believe we talked about the fact that if we could get above this 1,700 level on Ethereum, we might have something. We might be off to the races here, but it couldn't do it. That resistance area bumped its head and turned, and in one fell swoop all the way back down to 1,300. And if we can't hold there, well, you can clearly see where the next level is. It's right there at 1,100. But we got to break below 1,300 first, and we haven't done that yet. But really negative news from the crypto Bitcoin world in the markets. Taking a look at the EWA, looking at some of our international markets with Australia. Churning back to the upside, it was really key that we got above 21. That was important, and we've held there so far. There's a little bit of resistance there at 22, but at this point in time, especially with that wave 5 being at the 61.8% fib level, there's a really good chance that unless we get some sort of a really black swan type of event, vertical move. That was one thing that I'm going to go back here that I wanted to say. To see this vertical of a move to the downside, I think we need some sort of a black swan thing. Iran, China, Taiwan, all that stuff that you hear the rumblings about. One of those would have to be more concerning than where it is now, I think, to get a move like that, because the Federal Reserve raising rates, that's old news. We know that. We know they're hawkish. All that's priced into the market. It would take something that hasn't been priced into the market yet, in my opinion, to move lower. When you look at Australia, it's like, we're not worried about you guys. We're churning back to the upside. And so perhaps we get a little bit of resistance there at 22, especially depending on when we get there, because we're a little bit overbought from the 10-day moving average. Remember, you can't break above a resistance level when you're overbought. If you do, it doesn't hold. I shouldn't say you can't break above it. You can. But what happens when you do break above a resistance level and it's already overbought or oversold, depending on the direction, it doesn't hold because you're already in an overbought or oversold condition. So what would be ideal for the EWA is some consolidation here right around this 22 level, let the 10-day moving average catch up, then make a run, and then you probably have a pretty clear path up to that 23 level. Taking a look at Canada, let's see how they're faring. Very similar to what's going on with the EWA. You can see here that the key for the EWC, if you've been following along with these recordings, is 33. So it looks awfully similar. We're above 33. We've held above 33. And the next potential area there of significant resistance is all the way up at 36. Now, you could argue that probably the US needs to be moving higher for these to play out. And so if we did move the wave 4 even up to the 61.8% level, could that be enough to get these international markets up to their next levels of resistance? It could. But boy, that's pretty interesting looking at Canada there above 33 and looking fairly strong with the potential for moving up to that 36 level. I think that could really occur. Looking at INDA, and we talked about the Indian market before. We need to take the Elliott wave pattern off because that wave 4 was disqualified. But we have a really nice impulse move here. This is extremely similar to our DIA. But at this point, we are a little bit overbought now on the INDA. But we said if we got above 41, we could probably come up to 44. And we are not far away from 44. That's where the rubber is going to meet the road on the INDA, the Nifty, if you will, in India. And if we could consolidate here, also just a touch overbought. So if it were to try to run above 44 right now, that likely wouldn't hold. But some consolidation in this area here. We have some congestion back here from August and September in the 43 to 44 range. That's right where we are now. So if we try to consolidate here and then break above 44, then perhaps we could have a significant move higher in the INDA. And this is really a clean impulse move right there, moving back to the upside. So same question. Is that going to be a zigzag, triangle, flat? What's occurring here in the INDA? It could hit 44 and bounce down and move into a flat or a triangle. But if it breaks above 44, then we're clearly in a zigzag pattern to move higher. And we take a look at, see how that plays out. The EWG for Germany is finally moving just when we were questioning, whether or not we were going to break this wave 5 low and perhaps relabel this for the 5th time, which is unprecedented in the years. The 4th time was unprecedented from what I've been watching. But Germany trucking back to the upside here. It almost looks like the US is kind of lagging some of these global markets now, where a lot of people feel like the US leads global markets. It doesn't seem to be at this moment in time with some of these stronger moves. But once again, the EWG is also a bit overbought from its 10-day moving average. There's some resistance here at 23, but with the wave 5 down at 68%, we could see that move back up to 24. That's very possible. Even with this move here, even though it's a little bit overbought, we could go up there, but it would be a stronger move to just consolidate right here with a little bit of resistance at 23. Let this consolidate, let the 10-day moving average catch up, and then run up to 24. But pretty impressive moves in the global markets, which makes you wonder, is that why we haven't seen more strong moves out of interest rates and the dollar? Is because some of the global markets are starting to feel better about their economic forecasts moving forward? Pretty interesting. We've been looking at the EWU because it was so much in the news with the new prime minister and everything. And this is the one that flabbergasted me probably the most of any of the international markets, is how in the world is this churning up here? But it is a wave 4, so it's the wave 4 corrective move out of a 5 wave to the downside pattern. So coming up here, we're right at the 38.2% fib level, so seeing that reverse and head back down would make a lot of sense to me. But we are well above the 10-day moving average. We're a little bit overbought. So is that going to reverse and head back down? How in the world have we had this kind of a bounce with all the negative news that's come out over there in the United Kingdom? Really difficult to believe. And then we've been adding in the EWJ for Japan because of their bond market was just in a state of flux. But look at that. Their equities market is moving. None of this stuff makes any sort of sense as far as the typical correlations of what occurs. So this is still in a wave 3. We have not labeled a wave 4. There's a projection way higher of where the wave 4 could go if we do label the fact that we're in a wave 4. But notice the wave 3 is still in green here. That's the current wave. We've not labeled a wave 4, and we're at a level on the EWJ where we could find some resistance there, a little bit above the 10-day moving average there as well. So I'm more curious about what's happening in the Japan market than I have in a very long period of time, going way back to when they were over here buying all our real estate when they first started lowering rates and their economy was booming, etc. So things are a little bit different now, but that's a pretty impressive move. But now we'll see, can the EWJ get above 52? That's going to be some resistance there, you would think. It's overbought. It's at a point of resistance. Be shocked to see the EWJ make much more of a significant move above 52 from here. That would really be surprising to me. But yeah, I just wanted to share some of those. Let's look at some energy stuff. I know that our alert subscribers with ewotrader.com, if you've wanted to be an alert subscriber, it's ewotrader.com. We have 3 different portfolios: a directional portfolio, the strangles with consolidation patterns that are ready to break out, and then we have our setup that I'm going to show you here in just a second for our time strategy, which is stocks that have had big moves down, spikes in volatility, and look to stay in a trading range. Here, all of those are potential portfolios if you're interested in becoming an alert subscriber. But you can see oil tried to get above 75, but look what happened. This is exactly what I've been talking about. In fact, let's just walk the chart back a couple of days and get off of that and walk the chart back, and you can see we got a little bit overbought, right? So we broke above 75, which we knew that was the key, saying if we could get above 75, we might have something going on with oil. And we broke above it, but we were overbought. And what have I been saying? When you break above a resistance level or support, when you're overbought or oversold, it doesn't hold. And there we go. So oil back down today, back below 75, touched the 10-day moving average. So we did correct the overbought scenario. Can we turn and get right back above 75? If you're bullish on oil, that's what you want to have happen. You would want to see this immediately reverse and get back above 75, and then perhaps we do have something moving to the upside. If you're bearish on oil, you want to see follow through back to the downside tomorrow. So you want to see another negative day in oil lower. I saw some stuff about GLD, gold, on the financial networks to see if perhaps we're getting some sort of a bid. And look at that. You can see the bid there in the GLD breaking up to 160. But look where we are. This is the problem. And this is what's happened. We tried it again back in early October and got turned back because the same type of scenario happened. If we go back and look here, you can see there we were, broke above 160, but overbought. What happened? Didn't hold. So now we're back at 160 again. but we're overbought again. So can we break above 160? I submit to you that if we break above 160 tomorrow in the GLD, it won't hold because we're too far overbought. So some consolidation here around 160, let the 10-day moving average catch up, then try to break above 160. Then we have something going, and then we're likely moving up here to this 168 level, which is what we were talking about back in the beginning of October. But because we were overbought, it didn't hold. So we're trying again, but we'll see how that plays out. I might as well just show you SLV because that's probably going to come up in the Q&A, and then we'll move on. But taking a look at silver, look at that breakout move in the SLV. Pretty darn impressive move higher there in the SLV, breaking above this level here at 18. And we are overbought again, significantly so, with a gap there. Frustrating that we have that gap. So we're at an area of pretty good resistance there, right at 20. We have a gap below. We're way overbought. I just don't see SLV going much higher from here either, not without a consolidation or a pullback. So if we consolidate in the 20 range and let the 10-day moving average catch up, do we have to fill that gap? No, we could take off and move higher from here. And if we can get above this area, if at some point the SLV can get above 20, look where we have a pretty big move all the way up to 24 that's available. But you don't want it to break above 20 now. If you're bullish on the SLV, you don't want it. I'm telling you, you don't want it to break above 20 now because it will not hold. So let's see if it consolidates, maybe pulls back a little bit. But holy cow, at least seeing some sort of a bid in the metals is interesting, even though it's overbought and neither move looks like it wants to hold if we were to go higher from here. But this could be the start of something if we consolidate, let the 10-day moving average catch up, etc. So I did want to show you where we are with our time strategy. This is our website, ewotrader.com, and I mentioned the 3 different portfolios that we have. We have subscriptions available for either of those, and what the subscription is that we send out alerts for entries, any adjustments, and exits. So where we look at TradeFinder for case study considerations, but you're kind of on your own to handle things, we send you out and hold your hand from start to finish. So 2 new ones that we added yesterday were on Yelp and APPN. So one's down less than 1%, one's up 2%. So call that a push on the 2. But you can see EW is up 15%, DVA is up 5%, Meta, which has had a nice move back up. If that can get back to 100 within the next week or so, holy cow, that's going to be a home run trade there. But what I wanted to show you was look at SI here. That stock was down, and it's because it's capital, Sigma Capital, something like that. But it's very heavily tied to Bitcoin and the cryptos. It had a horrible day today. It was down over $11. Over $11 it was down. Can you imagine if you had a directional position on that, what would have happened? But because it's in our time strategy, we went from being up to down 30%. So it's only down 30% on a day when you would have been wiped out if you had some sort of a bullish trade. I mean, the stock was trading at $55 and it lost over $11 today. So that if that would have been a call option, it would be 0 right now. But that's the beauty, the risk management side of things with the time strategy, that you can have a horrendous day, a wipeout day, and the worst that happens is you lose 30%. And so we've already recovered that in those others. So anyway, I wanted to share that with you as far as our alert portfolios. And if you become an alert subscriber, you're invited to the insiders meetings that we do, well, every Thursday night, but maybe not this Thursday if Hurricane Nicole has other ideas. But we'll see. Live in a newer development, all the power's underground, so we can perhaps survive this. The beachside stuff, they all lose their power for weeks when we have one of these hurricanes. But if we're able, we'll be here Thursday night. So we'll see how that plays out. And then looking at our case study considerations that we identified in TradeFinder. So we looked at AGCO on 1025. So that's where we were. And then last week it looked like, oh, yikes, we're pulling back, but look where we are now. So nice move to the upside there. So when we looked at it, we were at 118, and that's where we are, or where we were, and now we're at 123. That's a 5-point move to the upside. Again, how greedy do you want to be? That's the difference between TradeFinder, where you manage them yourselves, or within our alerts. Now it's in a wave 3 that could help you to, perhaps you want to stay there a little bit longer. That's kind of up to you, but that's a pretty strong move. So in this kind of market, maybe you want to wait and see how the market reacts tomorrow. But how much profit do you need before you start to feel like you're getting greedy? And then ADP, man, I heard some comments last week after we looked at this, and then the next day we went down. They're like, yeah, great timing there. Well, you feel differently now, don't you? Again, stuff doesn't go in a straight line. That's why Elliott wave works. What is Elliott wave? Elliott wave is analyzing impulses and corrections, because that's what the market is, a series of impulses and corrections. So if you're going to get out every time you have a corrective move, you're never going to make any money. You're just going to whittle your account away. I call it death by 1,000 cuts, and you'll be out of the game. You have to understand that there's going to be some retracements. There's going to be corrective moves. And so if we go back, where were we last week when we looked at it? On November 1st, right here at 243, and then you look now and we're at 245. So we had this move to the downside, which didn't feel good, but now you're above. You're a couple of dollars up of where we were last week, so now you're profitable here as well. So the two alerts that we have that could be, well, they're not alerts, but the two case study considerations that we've identified at TradeFinder are both profitable right now over the past 2 weeks, which I think that's pretty amazing in itself with what's occurred in the markets. All right, so let's go ahead and see if we can find a case study consideration for tonight, and then we'll open it up to questions. So taking a look here, holy cow, there's 11 candidates in our time strategy. Holy smokes. So when we look at the impulse move, now this is interesting because the impulse is showing 9 results here. That's a lot. Now one that really jumps off the page is NVIDIA. I think everyone is looking for, when is that entry for NVIDIA where we can take advantage of this massive sell-off that we've occurred in NVIDIA and find a move to the upside. Zach, I know this is one of your favorites, so you're probably paying attention here. Let's see what the DMI looks like. And look, the ADX is turning back up above 20. We're getting separation here. That looks pretty darn interesting in NVIDIA. How can we turn away from that? We had a wave 5 low there at 142, so we're not going back to the previous 4. So what you do here from an Elliott wave standpoint, for those of you live streaming on the different services that may not have found us before, when you have an Elliott wave pattern and the wave 5 goes beyond 100%, you only look to the 61.8% level, which that makes a lot of sense because look at all this resistance that's here. So 220 would be the target on NVIDIA, not all the way back. I want to be clear, not back to the previous 4. That doesn't happen. You go back to the previous, or the 61.8% corrective move. So there is a potential for NVIDIA to go to 220. I don't know that that happens without a decent US market, which we could find out tomorrow, but wow, is that interesting? That's going to be hard to beat. I do want to look at VEEV because that's been a good one for us in the past. We had a really good run on that. Let's see what the DMI is showing here, because it looks like this one's trying to set up again as well. Also breaking back above with good separation. I don't like that doji though. Yikes. The doji there is concerning. It's in a wave 5 pattern to the downside. So now you have opposing forces here, right? You've got a wave 4, which that's okay because the wave 4 means it's an upward move, but we're getting awfully close to the 38.2% level. You could see and make a case for moving up to that gap, closing the gap at 200, but I don't like that doji. So that's going to be a concern for tomorrow's trade. But if you wanted to watch this and see what happens with the moving averages here, we're not that overbought at by any stretch of the imagination. But I think what makes more sense here on VEEV is to watch 180. If we break above 180, then I think, okay, we're going to close that gap at 200. That's your trade. So if we get above 180, you look to see, I'm going to make a note of that for next week. Let's look at VEEV and see if it can get above 180. It's going to 200. So that is a watch list. And yeah, see all this stuff on here? I am so old school. I still write stuff down. I know a lot of you have fancy spreadsheets, etc. I know a lot of our subscribers have really fancy Excel spreadsheets. Man, I just have old stacks of paper because I still write stuff down. But that's what I would look at there. So let's go ahead and call NVIDIA our case study consideration for tonight. And 180 is the first fib level. That would be plenty. We don't even need to hang around to a potential move up to 200 or even 220, where that 61.8% level is highlighted in red there for you. But I think potential move up to 160. It's got no resistance until 160. So it could bounce around a bit between 160 and 200. So let's call NVIDIA for tonight. I know Zach's excited here, so he'll have some pep in his voice to go through the questions. Let's say, so we're at 146. Let's just call it up to 160, and it could go higher. But that's enough of a move. We're looking for 10% moves. That's a 10% move. So we don't even need it to go higher than that. Let's just call a move from here to 160 at resistance. All right, with that, Zach, let's take some questions.
Yeah, no, that worked out quite well. Very happy with that selection for the case study consideration this evening.
So that looks a little better than your Ethereum, huh?
yeah, there's no question there.
So hey, you're breaking even, right? You got one moving higher, one moving lower, so that's all right.
Yeah, and there's definitely a possible viable point for re-entry on Ethereum too, so not necessarily a bad thing. But
yeah, if it gets back down to that support, that might be the greatest gift ever. But anyway, let's move to questions.
Absolutely. So yeah, I saw we had a hand raised, but that just went down. So yeah, just to confirm, we don't do the voice questions in this session, but we will certainly love to hear your voice in the insiders meeting, pending the webinar does not cancel those plans, or the hurricane doesn't cancel the webinar there. So you covered a lot of the questions that are in the Q&A here. There's some continuations to those questions, so we might come back to those with the time remaining, but there is a question here from Will asking if you can look at PANW.
Oh, that's cyber security. So Palo Alto is always, it's one of those ones that I keep on my quick watch list. To me, it's mind-boggling that it ever goes down, right? Because all you hear is all the cyber stuff that goes on in the world. But I think we tried to break below 150 and no follow-through day. See that breakdown on the 4th? No follow-through, moved back to the upside, and we got back above 150. Let's see what the pattern looks like here. Oh, look, we hit 2 days right there on the top of the wave 5, and we got a gap up here. I would have a hard time thinking that we don't see that 160 gap get closed on PANW. That looks really good to me. Now, clearly, if it breaks back below 150, that changes the game. But for now, I think if you wanted to take a speculative shot at something, the wave 5 is labeled. It's not purple, so it's not saying that it's done, but it could be. It's at 84%, and we've hit the top of the tap box 2 consecutive days. So if you're looking for a speculative upside move, you could do a lot worse than putting this one on for a move up to fill that gap. I kind of like that one. Good call there. We touched the 10-day moving average on the high today, but there's resistance. There's just not much in the way between here and 160 and that gap. It's hard to imagine that it breaks up there and doesn't fill that gap. Maybe it needs to come down and fill the lower one first. And then you just have to reset and wait for it to get back above 150 again. But I like that one.
Agreed. Yeah, good spot there, Will. Next up, we have Larry, who would like to look at UNH. It's a defensive healthcare stock. What wave is it?
United Healthcare. I'm sorry, what wave is it? Is that what the question was?
Correct.
It's in a corrective phase. Is that a zigzag? Let's see. It could be. Yeah, it is. So it looks like it wants to take out that high at 560 and go up to 570. That looks like the target there. And then I think we have a big zigzag here. So I think this is a complex C wave, but let's see here. Yep. Oh, yeah. So the 100% extension on the big zigzag is up at 590. The complex C wave extension is 570, but you can see that goes up in the 590 range as well. So you see you have the C wave extension up in the 590s, and then you have the complex C wave zigzag also in the 590s. That looks like that wants to go higher. Insurance, for whatever reason, is I talk about this often, that there's money rotation and you try to find where the money is rotating, and there's no rhyme or reason to where it goes. Insurance is a place that money has been moving into. You can call it a defensive sector. You can call it an area of growth. You can call it an underperforming sector. It doesn't matter what the reason is. You look for where rotation is, and insurance has been one of those places. We've taken advantage of it for our alert subscribers as well. Not necessarily for United Health, but we did Global Life, and we did Cigna, but that looks really good. I think that I think we're going higher there on UNH, and I think you could see 590, which is 40 points away. That's a pretty nice move.
Very well. Thanks for that.
Yeah, I'm actually going to make a note of that too, so we can look at that. So we'll look at VEEV next week, and let's come back and see what UNH looks like next week as well. So these are watch lists for next week.
All right, I'm going to try to get as many through to you.
Yeah, sorry, keep going.
Remaining. No worries. Harry would like to look at FUBO. FUBO.
Yeah. This is, there's so much meme type of talk here, and you can see why. It was, when it came out from the streaming and the whole COVID stuff, and it's a streaming service. Like, there's so many of them that are out there. If anyone's not familiar with Fubo TV, if you have a smart TV, you probably have seen the opportunity to get on it. But what looks really exciting here is this massive descending triangle. Let's see where the, yeah, that looks really good. I'm not sure what the options look like here, but we'll keep an eye on that one. Look at that tomorrow. The negative side of things is if it's going to break to the downside, it doesn't have much room to go, does it? When you're looking at one of these big triangles, you usually want room to move on either side of this. But if it were to break to the downside, a couple points, that brings it down to the 1 range. I can't tell you which way Fubo is going to go, but I can tell you Fubo is getting ready to go somewhere. Something's getting ready to happen. You've had 4 consolidation days in a row, right at the 10-day moving average, right at a major level of support here, just above 3. You're about to probably get a $2 move out of this stock, but I don't know if it's up or down. You could argue that from a fundamental standpoint, how can it go lower? Well, just as soon as you say it can't go lower, it can go lower, but it's probably going to make about a $2 move. That is a really nice looking descending triangle. It's got a low ADX, convergence with all the major moving averages. It's getting ready to do something.
Yes, indeed. So next up, we got a couple questions around CAT, specifically one here from David. Rob, what are your thoughts on CAT? It seems like it's trying to make a new high here, like the SPY, NASDAQ, and Dow. It seems like it's a broadening channel. I think it's absolutely overbought and needs to correct. I'm viewing support levels at 190, 195 and 180. So this is one we've been looking at recently.
Yeah, I can't agree with you more. It's been overbought since here. I feel like it will come back down. Just remember that when you have these vertical moves, they get retraced. But we talk about this a lot. We talk about gaps. We talk about vertical moves. And you don't know when they're going to get retraced. Break out of a triangle. All of those things get retraced. Sometimes immediately. Sometimes it takes some time. As overbought as this was, I thought we would probably come back down to 200 rather quickly. That made a lot of sense, because how many times have I talked about the market doesn't always do what makes sense. But when you go back and look at that, You're way overbought, way above the 10-day moving average, big gap. You got massive support at 200. So you come back down to 200, you fill the gap, you let the 10-day moving average catch up. All that made perfect sense. That's not what happened. It's continued to go higher. But you know what? The put options have not been hurt that bad, considering how much we've moved to the upside, which means they're still holding volatility in the options. So that makes you think that you're probably right. It's just a matter of when it's going to reverse. Otherwise, they would have sucked all the volatility out of the puts, and it would have been a much bigger loss than where it is now. So, I mean, we're at this is it, right? I mean, we're at 230. You could argue 235 maybe, but this is where the rubber meets the road here. It's still overbought. It's gone vertical. It's going to come back down. Just a matter of when. And that's a big key when you're trading options, right? Timing matters. Direction matters, but timing matters too, because you can get the direction right. And if you get the timing wrong, you still lose. So you got to get them both right. But it is comforting to know that we've been on the wrong side of this for over 10 points, and the put options haven't been hurt that bad. So it's got to come back down and get back to reality at some point. But does it try to break 230 first? I think if it does, if it tries to break 230, we add to the puts. That's probably what we'll do, and see how that plays out. It's a speculative trade. It's not in one of our 3 primary portfolios, but it's still tremendously overbought. And if I saw, it tried today and it came back down, but I saw another attempt at that where it looked like it was going to try to close above there, I think we'd add to the puts. But look at that 10-day moving average, how vertical that's moving. You can see stock charts move vertically, but it's rare that it moves vertically enough that the 10-day moving average moves vertically too. It's tremendously overbought. So at some point in time, it'll come back. It's just when.
Very well. Thanks for that, Rob. There's multiple questions and comments around DXY, which you covered DX spot V earlier in the session. So I would say
it's the dollar. Yeah, I don't really have much else to say. The fact that it's broken below the 10-day. See, look, when we broke below it before here, no follow through. There's follow through this time. So I think you want to really pay attention to what occurs in the next day or two on the dollar. And then we have to try to surmise, what does that mean? Is money leaving the dollar? Does that mean that people, the global economies aren't as concerned as they once were, that we're rushing into the dollar? So is that a bullish thing? Or is it telling us that the US economy is facing some really dire things and the money's rotating somewhere else away from it because it's had a big run? Either of those scenarios at this point in time would make sense. We're just going to have to wait and see which one plays out. But you have to pay attention to the fact that there was follow through to the downside on the dollar today. That does matter.
Absolutely. And so I see we're 2 after the hour, so I'm going to give you 2 questions here.
Okay.
To wrap up the evening. One is one that I can answer real quickly from Daniel, but I feel like it'd be good to address everyone on the webinar, asking, in your alert service, do you make very many directional future trades? So answer to that is yes. If you want to add anything there, by all means.
Well, we don't trade the futures. We do trade directional trades. I look at the futures. One of the things that we're going to be adding for our alert subscribers is a trading room. But we've got a whole list of things that's coming, so I don't want to put any sort of a commitment on a date when that'll happen. But what we'll do is we'll be live throughout the trading day, and what we'll be looking at is the futures. And so if you wanted to trade the futures based on patterns that we identify, then that'll be up to you. Be kind of similar to the TradeFinder thing, that we'll look at what the Elliott wave pattern is doing on the futures, etc. But we don't actually trade the futures. We watch the futures and we make decisions off of what's going on there. But I think it's going to be a lot of fun I think people are going to get a ton out of it, especially when they see how well not just Elliott wave, but our confirming indicators, the DMI, the CCI work, because we're going to look at a 3-minute futures chart is what we'll be looking at for our alert subscribers there. And you'll see, holy cow, these patterns play out over and over and over throughout the day, because we're mostly like in the, this webinar and the insiders, we're looking at end of day charts, but all of it works exactly the same intraday, whether you're trading currencies, futures, commodities, whatever you want to trade. You just got to learn the patterns because they show up in any of those markets.
Absolutely, and thanks for elaborating and clarifying that there, Rob. So we'll finish here with a symbol from JJ asking about EQ2. Sorry, I'll try that one more time. EQT.
Not super familiar with this one. Seen the symbol before. So this is one that came down and tested the 200-day moving average. You can see where that wave 4 went to 81%. So since it violated 78.6, we're going to turn the Elliott wave pattern off. But what you see here is really clear. It's in a nice, well-formed and large symmetrical triangle. So when we look at that, let's see, the bottom is 32, the top is that's almost a 20-point mouth on the triangle. And for those that aren't familiar with our volatility portfolio, that's what we're looking at, is the mouth of the triangle to get the projected move. So you look for where the low is and where the high is in the mouth of the triangle. So a 20-point triangle in a $42 stock is massive and almost unheard of. So I can't tell you which way this is going to go, especially because the Elliott wave pattern is disqualified. So you take that off, but you have the 10, 30, and 50-day moving average all at the same spot. All I can tell you is this is getting ready to make a move, and it's going to be a sizable move. So when you see this kind of thing, either do a strangle that we look at with a 30 delta put and a 30 delta call, or you just wait for the directional breakout with confirmation and then trade a directional move from there. This could go either way, but when it goes, it's going to be a sizable move. It's going to be a tradable move. That'll be a fun one to trade. I'm actually going to add that one to the list too. So we have some, because we don't have a whole lot of open case study considerations because so many of them been closed and we've had such a good run. So we'll look at some of these things as follow-ups since we don't have the case study considerations to look at. But thanks everybody. As always, thanks for joining us on the multiple streaming platforms. It's great to be on LinkedIn. We've been talking about how we needed just a few more people to be able to stream there. We're streaming there as well. So thanks everybody for your time. I feel time's the most valuable asset we all have. And we appreciate it so very much when you devote your valuable time to us, and we do our best to make it an informational and educational use of your time. And for our alert subscribers, hopefully we'll see you Thursday night. Hopefully the roof is still on. Look forward to talking to you again soon.